Welcome to GSC Grays Podcast. Today, I'm joined by James Bush from our farm business team and John Coleman, head of agency. And we're going to talk about the impact of the budget on farming businesses, on the land and the property market. So, John, James, after the long-awaited budget from Labour, we now have seen the budget and the impact that might have for our clients and the farming industry as a whole. How do you feel the current budget will affect farming businesses?
There's a number of things that have come out of the budget. Again, the devil is in the detail, and that detail's still yet to come. I think in the first instance, the reduction of the BPS, the more significant reduction that we're going to see next year, is going to have a part to play in next year's budgets for farms. Limiting to 7,000 could be quite sizable for a number of businesses. I think in terms of longer term succession planning, it's something that we need to start considering now. Again, we talk about detail. We don't know the detail of it all, but it's something you need to start discussing between the family, particularly family farms.
Yeah, the tax on now farms and businesses on inheritance is going to be quite a significant change, isn't it?
Absolutely, yeah. And some level of planning needs to start. Although we need to take stock of what the actual detail is.
Yeah. And from a farming perspective, obviously with the budget coming in, we're sort of hearing that it's going to slow down growth. We're probably going to see higher interest rates for longer. How's that going to affect farming businesses?
I mean, higher interest rates are always an issue, particularly, farms tend to work on borrowed money, and you invariably do work on borrowed capital to make things work. So obviously any interest rate increases or interest rates being maintained at a higher level is going to have an effect long term. I think what it does do is put some focus on what we're actually doing as those businesses, actually looking at costs of production, where we can actually make a difference and make a change, and taking a step back and assessing what the enterprise mix is on the farm now to sort of mitigate against those potential issues going forward.
And certainly the clients I've been chatting to over the last 12, 24 months have been hoping and sort of budgeting on interest rates coming down, and that's been part of their strategy. Do we think that's unlikely to happen now?
I think the view is it's unclear, but I think stagnation in interest rates may be where we're at. They might hold, but I suspect they're not going to drop as quickly as we'd first anticipated. So it is something that we need to revise the budgets. Many farms will have done the budgets for next year. And we need to look at those again.
Yeah. Okay. And I suppose the other big part of the announcement of the budget is the impact on national insurance, minimum living wage, and I suppose that's going to have a significant impact on farm costing.
Yeah, and I think arguably that's probably one of the key points in terms of the day-to-day running of the farm. It's the stuff that's going to hit home sooner. The added cost of that labour is going to have an impact on farm budgets. So. I think whilst the tax elements is something that we need to consider in the longer term, things like the national insurance increases certainly need to be considered because they're going to have the more of an effect earlier.
And John, from your perspective, obviously changes on capital gains tax, inheritance tax, farming incomes potentially linked to the things that James and I have just discussed. What impact do you think this is going to have on the property and land market?
Well, it's interesting. It'll be interesting to see what does happen. Last year's market, or the market immediately up to the budget, was driven by cash flow issues and debt reduction. That's not going to change. And I think there's going to be more pressure put on the farmland market as a result of the budget announcements. The biggest key for me will be the impact on interest rates. I think that quite a lot of the products which are being offered at the moment have already factored in one, if not two, further reductions before the end of the year. Now, if they don't come and we see a squeeze back up on these interest rates, then I think it will put more pressure on those looking to restructure their businesses to try and reduce their debt further and put land back on the market. So I think the supply of land will increase again. And our expectations for the spring this year are very much to see quite a lot more land coming to the market. The question will then be who's going to buy it and for what reason. There's definitely been a change in the attitude from APR and BPR being removed from AHT. So there will be a different approach from the non-farming buyers in the marketplace. I don't think it will do away with them, because it's not the sole reason that non-farming buyers buy farm units. But where there are good farm businesses, what we've seen this year and what I expect to see next year is that they will still be strong in the market. They'll be looking for the best of the best, whether it's good chunks of arable land, well equipped, whether it's good and scalable areas of White Hill, which will bring in both hill farmers and natural capital investors. I think we'll see strong interest. I think there may be a squeeze on the more marginal units, but again, it's all about funding. It's all about their ability to get support from their lenders, and if they can do that, and that there's not a major squeeze on interest rates, then I see there being a reasonably productive market next year.
And do you think some farmers that perhaps were going to hold on to their farming assets to transfer down to the next generation for the IHT benefits of that and the rebasing will potentially look at selling the assets and distributing their wealth in a different way?
Well, they could do. I think there's been a movement towards that in the last couple of years anyway, and I think this will exasperate that decision-making process. And yes, I think succession has been a problem. The next generation wanting to farm has been a problem and has been a cause of property coming onto the market. And I see that, as I say, growing in terms of the reasons for putting land on the market. How they present those assets to the market will be interesting, whether it's getting out completely or whether it's just reducing what they have invested in agriculture with an opportunity to put money elsewhere.
So we've talked about farming businesses should be looking at the financial implications of the budget on the trading performance of the business, looking at revised budgets, enterprises mix and profitability, etc. But from a sort of tax planning point of view, James, obviously big impact will come from the IHT changes and also the capital gains tax changes. Is there anything that farming businesses should be looking to do today?
I think the fact that we've got to wait for the Finance Bill and subsequently the Finance Act and get the detail from that, it's very hard to make decisions now. What I would suggest is that farming businesses at least line up the advice. So speak to their accountants, speak to their trusted advisors now to at least put themselves in a position that when that detail is available, they can then start to have those meaningful discussions about the succession.
Yeah, I mean, and we've found from our experience, haven't we, these discussions take quite a long time, and once an agreement is reached within the family, what's the right thing to do, getting that sort of legal structure and framework and accountancy advice, it does take a number of weeks. There's quite a lot of work to do,
and it takes time, and there's a seeming lack of that advice out there. So get on to those people now and get them queued up ready to make those decisions with you as soon as the information's available.
Yeah, I mean, I think it's very clear from my world as well. Better decision making is made from longer consultation. So the sooner you can start the process, and I know that with many farms that we've sold over the years, that if they start thinking about it a year before they make the decision, the actual process and the rewards at the end of it are greater.
So one positive, I suppose, in the budget, James, is that the DEFRA budget has remained unchanged. Obviously, we've talked about the loss of BPS earlier and the impact that's going to have. But the actual amount of money available within the budget being the same, how's that going to impact farming businesses?
I think it provides opportunity to farming businesses. The ELM scheme is going to benefit from a further £500 million injection. How that's going to be delivered, we don't quite know yet, but it's encouraging that the budget has at least been maintained. So I think focus should be at looking at mitigating the reductions in the BPS by looking at further SFI, expanded offers, and hopefully the higher tiers will follow that as well. So there's definitely opportunity there.
Good. And from a GSC Grays perspective, what is our sort of thought process on how we can best help clients sort of with the impact of the changes and the advice that we can give?
I think the best advice we can give is no knee-jerk reactions, is to take stock of what's happening, spend some time to understand what the various elements of the budget are going to have an effect on the business. But whilst doing that, obviously taking stock of the immediate changes and reviewing the business position looking at the individual business budgets, and making business changes that will help mitigate against any sort of future liability that might come as a result.
Yeah. And we've got a program of business resilience events coming up this November. Do you want to just tell us a little bit about what they are?
Absolutely. We have a series of 8 events across the north where we are working with our partners to deliver business resilience meetings. Those partners are accountants, solicitors, and the NFU. We'll be discussing, obviously, the accountants will be spending some time on what might have come out of the budget, but we will be looking at the practicalities of how we can then build resilience into the farming business. So it's certainly worth people signing up and coming along to see what we might be able to point them in the right direction.
Yeah, the timing of those events seem very opportunistic with what's happened.
Yeah, I think so close to the budget actually being released, I think it is quite opportune that we're doing it so quickly. Obviously, we will still be lacking some details, we've said previously, but I think we're getting that get on the first rung of the ladder and start the process. I think that's the best we can hope for at the moment. So.
Yeah, and we know the direction of travel.
Absolutely.
And obviously in the budget, we've seen a lot of changes come forward, but there's some things that have stayed that we've probably thought we were going to lose. Things like the potentially exempt transfer, the Balfour matrix being. What impact does that have?
I mean, I think the things that we were expecting to come that didn't, things like potentially exempt transfers, the removal or changes to rollover relief, haven't materialized as yet. And I think that will take some of the brakes off the market, because there is still opportunities to be able to make these decisions, and there's still a positive outcome from being able to do it. If they had abolished both, then I think we'd be having a very different conversation.
So the budget is inevitably going to bring forward some restructuring of farming businesses and the industry, and there will be winners, there'll be losers. And who do you think will be those winners and losers in there?
Let me pick this one up initially. I mean, there were some real fears that the complete abolition of APR would decimate the tenanted farm sector and nobody would let a farm again. And I think that was a real fear that might happen. It hasn't happened to that extent. And I think actually now the way it's structured, and before I see any more detail, but I think the way it's structured is that there could be more opportunities now for lettings under FBTs, probably shorter term. But I do think that is back on the table as an option. I don't know what you think, James, but I think we were all talking contract farming and share farming, but I think this is now an option again.
Yeah, I think I'd agree. I think there's less focus on that, the land having to come back in hand, so there will be more inclination to go to maintaining, if not anything, FBTs, rolling them on for the annual renewals and whatnot. So I think there's less of a focus on taking that land back in.
Yes, the treatment of land for APR and BPR being the same now, really, and the relief. So there isn't the advantage that we thought there might be if only business property relief remained.
That's right.
Yeah, very much.
And do you think that that will look at more opportunities of land becoming available again? Do you think? I mean, we've seen the exodus of some tenants from the sector just because of all the changes with the support system.
I think for farms that rely on grazing license, there will be some opportunity again. Grazing licenses will be more readily available. So I think definitely from their point of view, there'll certainly be more of that. And I don't think the tenanted sector would necessarily shrink as much as we maybe thought it might have done under the previous rules. So.
And for businesses looking to grow and expand, do you think that there'll be more opportunities?
I do.
Yeah.
I think there'll be opportunities for those who can sort their finances out and can structure the expansion of their businesses. I think there's going to be opportunity for that. I mean, it's always been the case that economies of scale are essential, but I think that what is going to drive our market are bigger farms are going to get bigger, smaller ones are going to find it more difficult.
Yeah, and I think again, we talked about elms earlier and the fact that there's an injection of money coming into elms to help prop that up. I think we've got to be proactive and use SFI and stewardship as a means to getting a business that maybe historically hasn't been profitable to a more viable position in the absence of funding, additional funding, support. So I think we've got a time frame now. We've got an opportunity to actually strengthen those businesses so they are more resilient as we get further on. So yeah, absolutely, a lot of opportunity.
Yeah, conversely, I also think that there will be opportunities for tenants in longer term arrangements like AHA leases, that they might get opportunities to buy. When I think the issue for that has and will be funding. The jump from what they're paying in rent to what they're going to have to pay in interest rates in order to secure their farms will be greater than they would like. So once we start seeing interest rates coming back down, I think there will be opportunities for tenants to be able to buy their holdings.
Yeah. And I know internally we've had conversations around, actually, is it appealing now to start offering some long-term tenancies? Will that bring down the capital value potentially that's going to be subject to agricultural property relief and inheritance tax in the future? Is there merit in looking at long-term agreements?
It's interesting. I get the feeling that if it is, it's an unintended consequence of what they've done. But yeah, I think it's a good point.
Well, I hope that's provided some useful insight into the budget. We'll look to put out more information as things become clearer. Look out for our updates on our social media and our podcasts. And I hope that's been useful.